Well, good evening, everybody. Welcome back to Strongman Personal Finance. We got to talk about old meat smoker, meat choker Kevin, my favorite stock trading guru, who is such a great investor that he has the audacity to charge you thousands of dollars for courses. And the value that he supposedly provides is that you know what's going on in the market and you can make money with his knowledge, right? So let's go reiterate what we talked about yesterday. And we're going to see how Meet Kevin's tweet aged. Once again, let me remind you, the purpose of Meet Kevin's courses is to help make you money. Kevin is trading. He's giving trade alerts, basically buy and sell alerts. Therefore, if he does bad at trades, you probably shouldn't give him your money. And if you want to be a long-term investor, you should just buy an index fund. So the only value Kevin provides is by helping you make money with short-term market fluctuations. Right? Am I right? But he's got Pokemon in the background. Wow! So here's old fearmonger here. And of course, he's such a genius. All right, this is the genius of Meet Kevin. He pulls up a historical example of a market event that happened, which, oh, by the way, you can always find a correlation in the past to fit your current narrative, which is to generate fear, which is to generate eyeballs. He wants you to watch the market constantly because he provides you the elixir, the toxic concoction, which is his advice, which is his trade alerts, that will result in you losing money. But it makes him money because you're buying his courses. But you dopes don't see that because you're a bunch of clowns. Anyway, me, Kevin, posted, wow! The stock market warning, because as a long-term investor, I need a warning. But as a short-term trader, maybe I do need a warning. I'm going to trade because I paid Meet Kevin money. I want to trade and learn to make money. So let's see what Kevin has to say. After the Fed cut 50 basis points, 17 years and 1 day ago, the last Fed chairman farted and danced for 5 minutes at a club on this day 17 years ago. And then after that, the market fell 18%. So if Jerome Powell goes and farts and then dances for 5 minutes at a club, the market's going to fall 18%. That's basically what's happening here. The NASDAQ 100, SQQQ, of course, we're talking about tech, rallied 11% to all-time highs. Oh my God, just like today. The stock market rallied today, just like me, Kevin said. History's repeating itself. Oh my God. In the 52 weeks thereafter, the NASDAQ 100 lost 54.5%. Yes, because we entered a housing crisis, a total crisis. The whole housing market collapsed because of all sorts of reasons. Okay? Are we there? I don't know. Are we going to housing collapse like we did in the Great Recession? I mean, who freaking knows? Maybe. But this was the result of historical circumstances that were unique to that time. Okay? It is not predestined that stocks will fall 54%. If you listen to this advice with, what are you going to do? What would you do if you trusted me, Kevin, because he's such a freaking genius? What would you do? I would sell everything and wait to buy after the NASDAQ fell 54%. That's what I would do if I trusted him because I paid him. He's smart. Okay? Here he is. Whoa, look at his face. Whoa. It's like he's taking something up the rear end. And of course, the greatest tweet of all time. I hope he didn't delete it. Did he delete it? Here we go. Sell stocks. Take a vacation until early November. Well, what happened to the market today? VT basically vertical lined, and Meet Kevin's pricing power ETF dropped. Okay. This is a short-term market fluctuation, right? You can't judge an investment based on short-term market fluctuations, right? If you're a long-term investor, I 100% agree with that. Okay, this ETF went up more than this one today. Who cares? But if Kevin is a trader, that's what he's offering. He's offering you trading. He's offering short-term price predictions. That's what he's doing. You think his focus is long-term with, oh my God, the Fed did this, and me, Kevin did that, and whoa. No, he's offering trading tips. So if you lose money, like this, look at this variance. VT, the boring total world index, is up 1.8% today. And Meet Kevin's PP, that's so funny, is down 1.7%. So I guess your trade, which is what you're charging for, Didn't do so well, meat smoker. Now, if you go look at his ETF, PP, right? Treasuries, Rocket Co., Treasury, it's Treasury notes, Treasury bonds, and I don't even know what this is. I don't even know what that is. I don't know what half this crap. Gold. His ETF is all over the place. ProShare short Bitcoin. What is he doing? I thought this was the pricing power ETF. I thought the pricing power ETF was to invest in companies that had pricing power. Oh, yeah, treasuries have real pricing power. Gold has pricing power. Short Bitcoin has pricing power. This is random degeneracy. And oh, by the way, he's also trading, but he's also running Stock Sack, House Hack, planning YouTube videos, and all other things. But he has time to make rational decisions with his ETF. Okay, right? Yeah, okay. So let's listen to Meat Smokers. Let's make sure we're sharing here. Okay, let's listen to Meat Smokers' video. Flipping! So here's his other grift. Basically, if he makes a mistake, he just says, I flip flop, wow! And then he just goes on. And people buy it because he's human. You know, humans make mistakes. Even though I'm paying that human for a service, I'm paying that human to teach me how to trade. He's only human. So if I blow up my portfolio and I massively underperform the market in the long run because I'm trading based on his recommendations, it doesn't matter because he's only human. He can just make unlimited mistakes and pump FTX and all sorts of garbage, interviews clown CEOs. Doesn't matter because he's human, bruh. He's human, bruh. I'm going to go, drive and, accidentally run into people. Oh my God. I'm a human, bro. I'm a human. All right, let's see what old Meat Flipper has to say. And remember, this whole video is designed to make him seem like he's a professional, to convince you to buy his courses and to buy his trade alerts. That's what this is doing.
For the giant Meat Kevin flip-flop. What a
I suck as a trader, but I flip-flop. Wow!
day. The stock market, S&P 500, 1.5% over all-time highs. Tesla up nearly 7%. Jim Cramer poops on Palantir so badly yesterday, calling it a barometer of momentum, a meme stock, a cult stock, and he's not even sure if it's actually a stock. I tweeted about this on X, by the way, posted about it.
What about your tweet where you said to sell stocks, Kevin? Can we talk about that?
Palantir's up. Everything's going up. The market is in full-fledged euphoria mode, and everybody's been waiting for Kevin to say, this is it. This is the fundamental data we have been looking for that says this is it. We are going all in, baby. We are going back to being bulls.
Yes, because the market, the collective wisdom of the market, is wrong. Meat Smoker, who has 20 different businesses, knows what's actually going on. Sign up for my course, bro.
Well, this morning, and we're going to talk about it here, but this morning, as many of you over, frankly, somewhere around 1,500 or 2,000 of you that already know about this, thank you so much for joining me this morning in our course member live stream.
Oh, wait a minute. So if you had been at the course member live stream, pin comment below, you would have known what happened, but you didn't pay me. And therefore, you should probably consider paying me, okay? Because, there was like 1,000 people in the course member live stream. Yeah. Why aren't you signing up? You want to be poor? You want to be rich like me? Sign up for the live stream, bro.
Those of you, we already went through a 48-minute custom course member live on exactly positioning and valuations and thoughts. And remember, we still got that flash sale.
Oh, you're missing out. Sign up.
Going on until noon. So if you want to be part of that, you got a few hours left here to hop in on that flash sale. Check that out by going to meetkevin.com. And you can...
Remember, I pumped FTX. You can trust me, bro. Sign up. We got a flash sale. Any second it's going to expire. You better buy it now. Hurry. Does this bother you? Oh my God, I have to buy it. Oh my God. I don't get paid until... Crap. I don't get paid until the end of the month. How am I going to buy his course? Look at it. Oh! Do you not see the grift? Of course you don't, because he's got a lot of subscribers. He's got a RuneScape potion in the background.
Always for the rest of forever, get those course member live streams. So if in 8 years you're like, I wonder what Kevin's 48-minute positioning update is, you too could see it and see my thesis and rationale behind everything. But for now,
oh, please, I want to hear your thesis by why you have short Bitcoin and long gold and you have a bunch of treasuries. Oh, and Rocket. Please, I want to hear your thesis because your pricing power ETF will have a whole new set of investments in like 5 days. Man, buy this, sell this, whoa, buy this, whoa, wait, no, oh my God, whoa. That's what he does. What I just did, that stupid mocking of him, provides the same amount of value as what he's providing right now. The clownery, the clowns, and the screamings that I do provides the same amount of value as this video and his course member live stream does. It's worthless, but it's entertaining.
For now, we've got to talk about going bullish because, frankly, right now what's happening in markets is markets are saying, maybe we need to take profit on our recession hedges. You saw gold move down a little bit. You saw bonds move down a little bit, which are generally considered recession hedges. And now you're seeing recession, recovery plays, which are generally considered risk assets, right? Think about when the Federal Reserve capitulates, like they did at the bottom of the market in 2009, at the bottom of the market in March of 2003, at the bottom of the market, in the late 80s.
Oh, I speak with confidence, so I know what I'm talking about. I'm a really well-read historian on the market. I know so much, so you should trust me. I'm a course bro.
When the Fed capitulates, it's usually at the bottom of the market, and it's time to go all in because risk assets moon. NASDAQ goes to all-time highs, small caps skyrocket, crypto-related assets, if they existed back then, would probably go to all-time highs. Fed capitulation is a great time to go all in. And so a lot of folks are wondering, Kevin, is this a Fed capitulation? And we have to understand the fundamentals of this, and I think history is an interesting guide. So first of all, right now, we're getting a turning point in the Fed, as Jerome Powell
one of the biggest mistakes you can make is relying on history. Okay. Yes, history has patterns, but it's not always going to be exactly what it is. You see all those stupid charts where they're like, oh, inflation went up and then it came down. And it's just like it was back in the 70s. Oh my God, inflation's going to come back up. That doesn't necessarily mean that's going to happen. If that was the case, you could perfectly predict the market. Oh, and guess what? You can't, especially in the short term. So tell me, what's the value of his freaking courses? And of course, remember live streams and my positioning. Wow. Yeah, you're going to meet a lot of positions down at the truck stop behind the biker bar.
Likes to call it a recalibration. But is this a Federal Reserve capitulation? Is this the Fed saying, hey, we're just going to go all in and bail out markets? No. What we actually got was the Federal Reserve saying, hey, everything's fine. We're just going to try to front run some labor market weakening. Interesting. So to front run labor market weakening, what you're going to do is you're going to try to drive yields down. But what you in effect did is you actually drove yields up because people are covering their recession hedges.
The Fed totally screwed up. The Fed didn't know what they were doing. See, they wanted yields to come down. Well, should they keep cutting rates? Yields will just go up, right? When you cut rates, yields just go up. The Fed doesn't know what they're doing. And therefore, you should trust me because the Fed's totally confused. They didn't expect this to happen. They're probably pulling their hair out right now.
And yields went up. So now all of a sudden, when you look at the ADP employment report and you find out which sector of the labor market is the weakest and you realize it's small businesses that usually aren't public, you go, oh, higher yields actually hurts the weakest part of the labor market and actually exacerbates the problem. So the Fed didn't actually bail anything out yesterday. The Fed certainly didn't capitulate. If anything, they actually accomplished literally the opposite of what they're trying to accomplish.
The Fed is wrong and me, Kevin, is right. They should have me, Kevin, on the advisory board of the Federal Reserve.
They have just tightened financial conditions for credit cards.
When the Fed cuts rates to zero, I mean, that's going to do the opposite effect. Don't you see, guys? I mean, it's a one-day move in rates. I think in the long run, if the Fed continues to cut rates, then guess what? I bet you other rates will come down because they're all correlated with each other.
Loans on Teslas, for financing on solar panels, for the 30-year mortgage, all of those got more expensive. So think about that, how weird this is for a moment. The Fed cuts rates with a surprise 50, and every rate that people are exposed to gets more expensive.
For how long? A day, 2 days? If they start cutting rates and they keep cutting rates, rates will come down. Watch, okay? He's trying to make it seem like he saw something the Fed didn't. Seriously, would you trust the Federal Reserve or would you trust Meat Smoker? I would trust the Federal Reserve, but in the Fed, bro! Yeah! Buy me Kevin's course, bro!
People are like, oh, it's the start of the rate cut cycle. Yay, Tesla's going to go to the moon. It's true. Tesla's up 6.5 or whatever % today. But wait a minute. Rates just got more expensive. Expenses just went up at Tesla for them to pay those buy downs for you. The start of the rate cut cycle so far is doing exactly the opposite of what we would expect.
The market's totally confused. Why can't they see it?
This is not a Fed capitulation. This is a turning point in Fed policy, but fundamentally, nothing has changed. We are still in an environment with weaker than historical ISM services. We, in non-recessionary times, we should not be this weak on ISM services. We are still in an environment where job openings and the job market is rapidly slowing. And even Jerome Powell himself acknowledged that, there's going to be a lag to our 50 basis point cut. Okay, great. So in other words, not only are yields going up right now, but your rescuing of this jobs market isn't really happening yet.
This is so worthless. This is so, it doesn't matter. Even if the Fed is, he's supposed to be a trader and he totally failed and he screwed you. Do you not see what's going on? And his reward is that more people are going to buy his freaking course.
Okay, great. So now all of a sudden we look and go, okay, so we're not actually getting near-term support from the Federal Reserve for undoing a recession. So what fundamental data did we get that would indicate maybe no recession? Well, maybe GDP, right? GDP is obviously a good predictor, but it's also not part of the Federal Reserve's mandate. The Federal Reserve's mandate is around jobs and inflation. And if the Fed loses control on jobs, GDP rolls over second. It is not a leading indicator, it's a lagging indicator. And then, of course, layoff indications, which are rightfully still low right now, and probably go down as the stock market rises for larger cap companies, does help us.
Are you taking note? This is very important for your long-term investment success. Take notes, okay? If you don't listen to what he's saying, I might have to slow it down to half speed. If you don't listen to what he's saying, your long-term investment success may be compromised.
Move further away from a recession, right? Because as stock markets rise, you have less of being near a trigger point, so to speak, for layoffs, where valuations have collapsed so much that you have to lay off just to try to save business. You're further away from that as the stock market hits all-time highs, but it doesn't mean that recessionary considerations that are still present have all of a sudden evaporated. And so this is fascinating because a lot of folks, they look at very simply and they go, oh, Kevin's been bearish, so Kevin must be getting smoked. And what's fascinating is
Kevin must be getting smoked. No, actually, even though I say I'm bearish, but then suddenly the market goes up, suddenly I'm bullish. And I sold all my puts and I bought calls right at the exact time that I should have. Oh.
My hedge, the underlying position that my hedge is exposed to is down like 1.5%. We talked a lot about positioning, repositioning, change, all of that in Course Member Live this morning. Make sure you're part of that. But
see, I know how to hedge. So even though people say I got smoked, I actually didn't get smoked. Oh no, my hedge is only down just a couple percentage points. And if you were in my Course Member live stream and you pay me, you'll know, you would have known, bro. I can't lose. Hedging is free. It's so easy, bro. I'm a Course bro.
It's actually kind of remarkable because if you look at it, you're like, interesting. Usually when the market skyrockets, hedges get absolutely destroyed and smoked. And so I think there are really interesting ways not to be short the market that pay off disproportionately well if you go into a recession, but you don't want to.
Oh, he knows the secret sauce. Course Member live stream. You got to pay him. Remember, you're not going to get all the juicy bits just watching this video.
Recession, right? Recession is really bad for startups. All three of the startups I have recession is really bad for. But what I'm looking at is I'm looking at fundamental data, temporary job hiring, real domestic investment spending, the rapidity of the steepening of the yield curve, which is now exacerbating, right? We're at like 13 basis points uninverted. And usually when you get to about 50, that's when you're really triggering that recessionary pain. You're looking for a recovery in private jobs.
Because, everybody's been talking about a recession for 2 years. No, now something me, Kevin. No, oh my God.
And healthcare jobs. You're looking for recovery in both of those. Those are still both collapsing, right? These are problems. Of course, we've got more data coming up, more jobs reports, more inflation reports. We've got Q3, Q4 earnings. We've got an election coming up. And so what's fascinating is looking back at history. History actually tells us that when the Federal Reserve goes for a 50, especially when it's unexpected, you get a near-term rally. Consider this for a moment. I want you to go back to 2007, 2008. Let's go to 2000.
Before the housing market crisis. Are we in the same circumstances? If I had to guess, I would say no. We're not in the same circumstances where a bunch of unemployed clowns are getting adjustable rate mortgages. The only person dumb enough to get an adjustable rate mortgage was Andre Geek. Okay? Totally different circumstances.
2007, we cut interest rates 50 basis points on a surprise right about here. September 18th approximately. And you'll notice that
before the housing market collapsed, but okay.
NASDAQ actually rose an additional 11.5% from the interest rate cut of 50 to all-time highs.
It happened before, therefore it was going to happen again.
And after that 6-week rally that you got in the stock market, the market went into recession and proceeded to collapse by 54.5%.
Okay, so here's what we're going to do, guys. Okay? I know what to do. I want you to buy the NASDAQ, okay? And it's going to go up 11%, guaranteed. And then we're going to sell it right after it goes up 11%. And then the NASDAQ's going to collapse 54%. And then we're going to buy back in, okay? Everybody taking notes? That's what we should do. Buy my course, bro. Wow!
So then I look, I go, well, wait a minute. Things are rallying. This is wonderful. This is excellent. It's time to go.
But they don't read their history books.
All in, isn't it? I mean, stocks are up, so everything must be good, right? And so I take out my recession sheet and I go, okay, cool. What's fundamentally changed? Well, if the Fed is reducing by
recession sheet, is that in your Course Member live stream too?
50, that should be bullish. because it should mean yields are going down and we're reducing the odds of recession. But wait a minute. Nothing's fundamentally changed. We still have the recessionary red flags, and oh damn, yields went up, which is more recessionary, not less recessionary. Well, that's unfortunate. So then you wonder, okay, well, what are the next catalysts? Well, you have Fed speak that could talk rates down, right? You could keep markets still elevated, and you could talk rates down. Harker talks tomorrow at 2 p.m. Eastern time. Bostic Monday at 8. Goolsbee Monday at 10:15. Kashkari Monday at 1. Collins next Thursday at 9:10. Powell next Thursday at 9:20. Write these things down. Williams Thursday at 9:25 next Thursday.
That sounds like work hours. Okay.
Next Thursday, Barr at 10:30. Next Thursday, Kashkari at 1. Next Friday, Collins at 9:30. And 2 Mondays from now at 1 p.m., you get Powell. Then you get the October 4th jobs report, the October 10th CPI.
Guys, you need to call out sick so we can listen to all these clowns speak, okay?
Report, the November 1st jobs report, then you have the election, then you have the November 13th CPI report. But because yields are actually rising right now, I actually have reduced my position on the bear bull scale. You know, yesterday I'm like, they went 50. This is bullish. So I went from, 3.5 to 3.6. Now I'm down to 3.4. Because I'm like, bro, the market is doing the opposite in terms of yields of what it should be doing following.
So yesterday I was here, and then today I'm here, and then tomorrow I'm here, and then today I'm here. Wow! Wow, it's so easy to track, Kevin.
This Fed move. And it's eerily similar to what happened during the last recession. Now remember, when the Fed...
I never say this, but we need to sell our stocks. Oh my God, I can't handle the stress anymore. We gotta sell our stocks. We still sharing? Okay, we're good.
Starts with a 50 out of the last 21 rate cut cycles, you have a 50% chance of recession, historically. And so, in my opinion, this is not the time to cut hedges. And I'm not saying that you should be all in on a hedge, right? We talked about my,
Why are you hedging? For what?
$2.5 million trades this morning. Are they up? Are they down? Am I repositioning? Am I buying? What am I doing? We talked about all that in the course of my life. Make sure you're part of that.
Yeah, I talked about this, guys, but you gotta pay me, and you can find out too what I'm doing. Wow! Right below, discount coupons expiring soon. Oh!
Buy that the course before noon today. Flash sale.
Oh my God! Oh, it's already afternoon. Dang it! I missed the flash sale.
But remember, hedging isn't supposed to be your entire portfolio. It's not supposed to be the only thing that you have. Hedging is supposed to be something that, in the event of a tail risk, we call it in finance, in the event of a tail risk where you fall into a recession, you have a
Hey, numbnuts, you know how much money I have in a hedge? Zero. You know why? Because I'm a long-term investor. I'm not selling my stocks for 30, 40, 50 years. I might never sell my stocks. You think I care about rate cuts, hedges? Wow! What a clown, dude. Totally you're going to get absolutely obliterated with this guy's doublespeak. Oh, and, you'll lose your entire portfolio. You'll make some stupid mistake you didn't even know you were making. And then you'll go on to say, well, I flip-flopped. You should have been on my live stream. Wow! And you'll feel like the loser that you are listening to this dope.
Disproportionate upside and hopefully a more limited downside. And for me, nothing has changed for me to say, oh, it's time to fully flip-flop and go bullish and buy stocks. If anything, valuations have gotten more dumb. Palantir is trading at a 4.5 peg. And while it's got the momentum and it can keep going, that is twice the valuation it should be. Tesla.
Weren't you just mocking Jim Cramer for saying Palantir was a meme stock? Oh, it's double the peg. Wow! Oh my God, it's so short Palantir. Oh!
Tesla's trading at a 3 peg. That is nearly twice the valuation it should be. Trade
Also, Tesla should be $120. I hope it goes below that.
Desk is trading closer to a 3 peg. Not that bad. It's actually not that heavily overvalued. And then like an Enphase or Ubiquity, those are actually still pretty decently valued. Nvidia is actually decently valued as well, relative to some of these sort of earnings growth metrics.
It's easy, bro.
But I actually think this is an environment that is so eerily similar to 2007 that this idea of, oh, the stock market's up, it's time to flip bullish is just without logic.
We're about to have a global financial crisis caused by rampant speculation and CDOs and whatever the frick happened during the Great Recession. The same thing's going on now, okay? The world's about to collapse. The government's going to have to spend billions bailing us out. Same thing.
A reason and is very dangerous. Of course, there's always the risk of biases or whatever. But I think that's why it's so important for everybody individually to evaluate, okay, what information is useful for my portfolio, right?
See, it's actually on you guys. Even though I just said, oh my god, this is eerily similar to 2007. It's on you, okay? You got to evaluate your own portfolio, so you can't blame me. Wow.
And so, if you want, go look at the 48-minute live stream we had this morning. But I'll give you
my course, bro.
A hint here. Am I flipping bullish because that's what everybody's asking me? No, this is bad. I know I sound like a clown.
The market went up. It's bad.
When the stock market is flying today. And I'm like, this is bad. I know that sounds stupid, but look at 2007. Okay, that's all I got to say. I love y'all. We'll see you in the next one.
You should listen to me, Kevin, guys, okay? Oh, I miss making fun of that clown. Martin Shkreli and Fabio, they'll be legit finance. Everybody's Martin Shkreli. That guy's a dork. I'm 100% Ryu. I bought the dip today, bro. Remember he said sell everything yesterday? But he's becoming, he's richer than you, JT. Do you live in do you have millions of dollars? I don't think you do. So you need to zip it, buy his course, and take notes, loser. What inspired you to go? It sounded like you were tired of it. I needed a long break because I was traumatized by the grifters just constantly winning. And now I'm just having fun. I'm not taking this too seriously. Oh, yeah. Stocks will go down 1% tomorrow. And it'll be like, I told you guys. Wow. Yeah, good job, Kevin. Even though stocks are up over time, over the last couple of years, they're up pretty significantly. But thank God you told us to warn us the market was going to go down 1%. I don't even know what that is. Let's see. VT is outperforming. Over the course of 30 years, VT will utterly obliterate the PP ETF. Zero doubt in my mind. VT will absolutely annihilate PP. Mark my words. Strongman, I'm mowing yards, share my net with neighbors and burning trash. There you go. You're prepared for the apocalypse. Imagine agreeing to pay $420 a month when he literally said he's charging $420. It's fine. It's reefer, bro. See, $420. So funny. Evening, buddy. Hello, James. Wasn't his channel updated? Oh, we're going to cover that too. You know why I think he actually hid his videos? Because he wanted to delete the really bad ones and scrub them. Yeah, that's what I think he did. Let's see. Strongman needs your 50 because he lost his butt on Baba. He knows how to buy his understanding of the stock market. Yes, he doesn't know, even though he's a master portfolio of $500,000. He lost money on a Baba trade. So therefore, he doesn't know what he's talking about. And you should listen to me, Fatally Flawless. I know what I'm talking. I saw your comments earlier, boy. You know what you were saying? You were saying, I bought this and I bought. You got like $3,000 in your account, brokey. And you're buying a bunch of clown stocks. I don't want to ever hear your freaking garbage again. But yes, I do need your $50. Thank you. Let's see. All Strongman knows how is his understanding of the stock market. The dude bought okay, so here's the thing, boys. If you invest in a market and it goes down for 2 years, you are the worst investor in the world. Good investors buy a stock or a market that goes up for 2 years because the barometer of success is your 2-year performance, okay? It isn't over a lifetime. See, if you had bought the S&P 500 at the top of before the great financial crisis, you were dumb because it went down 50%. 2007, 2008. For 2 years, the U.S. stocks got crushed. And people like Fatally Flawless would have been like, you don't know how to buy stocks. See, you bought S&P 500 and it went down. And then guess what? Look at SPY from 2009 to now. But no, it's the short-term performance is all that matters. I am fatally flawless, and I have needles that I inject into myself in my picture. Okay? I am smart. You are dumb, strong man. He is so broke, and I am so rich with my Robinhood account that I'm better than you. Okay? Fatally flawed. You're arguing with a very special person. Okay, here we go. Here we go, boys. I have a 30, 40-year time horizon. People think I'm joking. They think that I'm joking. They think that I'm just saying that. I think in decades. You clowns think in vertical lines. Or you think like this. Let's cover this. It's not hard to buy calls and puts at the right time. It's easy, bro. With 0 day to expiration SPY options. Kevin could never, but Fatally Flawless knows how to buy 0 day to expiration options. This is the criticism I get. Oh, boy. China, please come back. Oh, my God. Every single person that mocked me, and I mean everyone, either directly or indirectly, and you know who you are, I'm going to roast you to your faces. I've been watching all of you. I see it. I see it. Oh, yeah. All right. Let's continue. We got distracted by 0-day option clown here. Let's see. VT is outperforming PP year today. He should have kept large cap tech in there. Then he would have outperformed VT because remember, guys, just like Kevin, see, Kevin uses history to make mistakes. But you using past performance to buy large cap tech means you're a genius. Okay, you are very intelligent if you buy large cap tech. Because if you look at the charts, large cap tech dips and it always comes back in a vertical line. It's like gravity. The sun comes up, the sun comes down. You go to sleep, you wake up. Not always. What's a given? Basically anything that's given, okay? It's a law of nature. Gravity, photosynthesis, U.S. stocks, vertical lines forever. It's the same thing. It's that easy, okay? And if you do well in a short time frame, that's all that matters because long-term investing is stupid. Long-term investing, no, you need a vertical line right now. If you don't get a vertical line, if you don't buy a stock and it doesn't vertical line, you're a bad investor, okay? That's how investing works. You're a genius. If you buy the dip and it goes up, you're smart. If you buy the dip and it goes down more, you're dumb. That's how investing works, okay? Oh my God, there's so many comments. Let's see. Holy crap. PP holdings are crazy. 50% bonds, 10% in wholesale home mortgage. Oh, is that what that was? Short Bitcoin. Dude, people make fun of VT. I'm telling you now, 99% of you clowns, especially 100% of me Kevin followers, will underperform VT over a 30-year time frame. I guarantee it. VT holders, if they can actually stay the course and not buy stuff that goes up a lot, like the real geniuses out there, you will outperform clowns. Like, how many times have the holdings of PP shuffled? His portfolio changes constantly. It's everywhere and nowhere. Okay? You think that's a winning combo over a 30-year time horizon? But I want my vertical lines. Kevin is a new Kramer. Well, Kramer actually, I think, managed a fund, didn't he? Like, didn't Kramer actually do well at a certain point in his life? Kevin is worse than Kramer. He could talk about stock market daily without any value added. Well, that's true. There should be reverse Meet Kevin ETF as his first derivative actions of the... God. Well, see, the thing about betting against me, so Meet Kevin is a trend chaser. So, he'll make money, like, if there's like a clown market, he'll basically buy all the stocks that have gone up recently. And sometimes those stocks have momentum. Like you bought ARK, it had momentum for a while. So Kevin's short-term performance is going to look stellar sometimes because he's chasing performance. And you can look like a genius if you chase performance. Like if you had bought Japanese stocks in the 80s, you would have been a genius, right? Because you had that momentum going for you. But in the long run, if you keep chasing performance, you're eventually going to make a mistake. You're going to buy stuff that goes up a lot, and then it's going to stop doing what you expect it to do, and you're going to get wrecked. So, buying a short Meet Kevin ETF, I wouldn't do that because in the short term, you can get wrecked, and then you're going to bail out of it. But long run, just don't buy his ETF. Don't listen to him. Buy a total world index and hold it forever, and trust me, you will beat 99. I'm telling you, you will beat 99% of people. Please, I'm in my underwear. Actually, can you see my undies? You can actually. Can you see them? You barely see them right there. Let's see. Has VT outed Hashack? I need to call Vanguard to make sure that happens. All right, well, that's the video. If you want a sponsored video, it's $50. I'll talk about whatever you want, or I'll react to whatever you want, but I'm not pumping your clown stocks. Check out my book, Stop Being a Broke Loser. It's on Amazon. If you want me to tutor you, one-on-one accounting, I'll teach you that. And finally, if you want me to do your taxes, I'm a certified public accountant. I provide real value. I have a real license and real experience. Then send me an email. We can have a tax consultation for free. Okay? But then after that, I'm charging your butt. I'm not doing your taxes for free. Anyway, that's it. Have a wonderful night. Do I do? Heck no. $50. Just to file the return cost me like $50.
Can you do my taxes for $50? I have 2 S corporations, and 2 LLCs, and a C corp, and 20 real estate properties. Can you do it for $50, strongman? If you charge more than that, you're a scammer.
No, but $50. Get out of here, boy. I don't review portfolios. Okay, here's my portfolio review. This is financial advice. Okay, call the SEC on me. 95% total market index minimum. And the rest, whatever you freaking want, but don't short and don't do things that have unlimited losses. That is my portfolio review. If you don't have 95% plus in a total market index and the rest of your investments somehow expose you to unlimited losses, like shorting, don't do that. That's a good portfolio. If you don't have that, your portfolio is freaking hot garbage. Now send me $50. Best way to save on tax. Oh, you'll save taxes forever with your capital losses. But there you go, 5%. Have fun. Just don't expose yourself to unlimited losses. Can I sell covered calls? You do whatever you want. Okay? For your income. Well, you should go to Khmer's forum or Discord. You'll learn about covered calls there. 95%. That's garbage. 95%. Are you a degenerate? All right, guys. I got to end this. Do I have time for another video? I might do another video. All right, guys. Let's do a Jeremy outro, and then I may do a sponsored video. Because, yes, I got paid. And if you want to do a sponsored video, you better pay me money. Lots and lots of money. Money.
Myself, I'm very well diversified across stocks. There could be a lot of things made up about me and just BS. That's all, a lot of people love to talk about me all the time, right? And it is what it is. And I don't look at that as like, that's a cool thing. It's kind of annoying, but it is what it is, right? People like to, discuss me out there. And it's never in a positive light, and it's never about my successes. They never talk about my successes about this stock or this stock or this stock or all those stocks that have, made me a tremendous amount of money or all the money I made last year in the market. Or they don't talk about any of that, right? They only shout the failures and what isn't going right. And then even when those go right, they never admit to that either. It's kind of funny how that works. But I don't expect